Hey, Dan Fitzpatrick here, and I want to look at Paycom software, and I'll tell you why. In my strategy session or weekend update for members, I said you don't want to touch Paycom because they're the anti-coronavirus. Their business model, hey, they help growing companies manage, their employees and all that kind of stuff. And this ain't that economy, which is why the stock's doing what it's doing. But I'm going to tell you how to buy it on Monday if it does certain things. We'll look at a different grid in a second. But first, why am I doing this? Because, it's not day trading to me. It's 59-minute trading. The quote, day trading strategies are working. Everybody wants to be a day trader. Most people lose money because they don't really know how. They wind up literally buying high from the people who bought low and then reversing it the other way around. So it can be a real, just a real hornet's nest you're going into if you don't know what you're doing. And we're offering the 59-minute trader course, which I made, built, tested, and taught for a pretty big discount. I think Gary's probably got a video and a page for you to look at. I'm not going to talk about that here. But definitely consider doing that. Consider spending the money, but more importantly, the time. I don't want you just to buy the set. I want you to use it. Don't just use it as coasters. I think there's 4 DVDs. So if you want to, you could have, a party of 4 and no rings around the coffee table from your drinks. But I'd rather you look at it and learn to use it. We are going to hold a follow-up live training course. I believe it's the following week. In a couple weeks, we're going to do that for those who are new 59-minute traders. I want you to be on board there. So let's look and see what we're doing here. All right. This is the type of screen that I use. It's kind of small just because of the resolution of this video. I use a 1-minute, a 5-minute, a 15-minute, and then the daily chart just to kind of keep me honest. I like to know where we are. I have a 6-monitor rig at home, 8 in the office, but I don't spend any time there these days. And so I'll have other charts as well. But this is sufficient for trading. And so the orange line here is the volume weighted average price. All right, you can see that the stock's been trading below that for quite a while, at least as measured in daily or intraday charts. So what we're going to be looking at on Monday, I would love to see the stock gap down. Love to see it gap down, say to 160, even lower would be awesome. And then we look for the reversal and the entry, and then we start trading it based on these pivot points. There's a lot more to it. I'm just kind of giving you the high points here. There's 3 levels of support, 3 levels of resistance, and how the stock ping-pongs between those levels tells us whether we want to be long or short. But here's just kind of a general rule for you. If the stock is below the VWAP, you don't want to be long. If the stock is above the VWAP, you don't want to be short. The exceptions to those rules, and they are big exceptions, is if the stock is well below the VWAP, that's probably oversold and it's going to rebound. So you can play that bank shot. On the other side of the coin, or I should say of the VWAP, if the stock is way above the VWAP, that's a bank shot that you can play. It's kind of dicey to short a stock that's going up quite a bit because you're kind of jumping on a rocket ship, assuming that it's going to run out of fuel and it might just go into afterburners. So you got to be careful about that. But the idea is reversion to the mean. That's what we're talking about, is a stock, when it gets too out of whack one way or another, it does tend to snap back. So in that respect, we look at extreme moves from the VWAP. But most of the time, the idea is that if a stock's below the volume weighted average price, it means that there's sellers. If the stock's above the volume weighted average price, it means that there's buyers there and they're soaking up the stock. So that's a general rule that you can use. And it's definitely a general rule that we're going to be using on Monday as I look at this stock among many others. So I invite you to join us. I really want you to get to kind of get good at this 59-minute trading tactic that I teach. And for members, it's a good, it's a really good investment. We'll just put it that way. We never had one bit of negative feedback on it. I don't expect it. And so that means that you're going to like it. And my idea is that you're going to pay for the cost of that, maybe even in the first trade, but let's just say that's the goal. Okay. All right. See you guys on Monday.